All right, here we go. We want to welcome everybody to the Hack the Markets podcast. I'm Albert Hall, the CEO of Hack the Markets.
I'm Jerome Vincent, president of Hack the Markets and also known as a market prodigy to some of you out there.
He wants to be known as the market oracle, how I'm known.
Got Raheem Carswell here. I'm CSO, the Chief Strategy Officer. Let's get it.
Kenneth Crowder, I'm a head of customer service.
And my name is Pierre Edouardson. I'm pretty much the marketing guy, the director of marketing. So
yeah,
anything dealing with ads, promotions, that's me.
Marketing guru.
The marketing
guru.
So today we just want to talk a little bit about what the market, what we see, get you guys a little bit of viewpoints of what we see, like what we like to look at. So today what I'm looking at is I know we got in focus with the FOMC. Pretty much that's where the Fed comes in and they kind of like set the interest rates of like where the banks go between each other, and they can pretty much have a borrowing rate. So we're looking to see if they're going to raise the rates today. Probably not going to raise the rates today. We got a pandemic going on. We got all types of stuff. We got too much slack in the market. We got too many jobs that needs to be created. So I don't think that the rates, like the Fed is going to raise the rates, but we have been seeing some higher rates. And I know, Jerome, you got something that you want to share about those higher rates that we've been seeing currently.
Let me go ahead and get this on my screen real quick.
So what have you been seeing, I guess, while we wait on you to get it up on the screen?
What I've been seeing is a steady increase in the 10-year treasury rates. Can you guys see my screen?
Yeah, we can see it now.
Yeah, you seeing the which one are you seeing? The one with the treasury?
Yep, the 10-year treasury.
Yeah. So what we're looking at here is the 10-year treasury rates. And for those of you who might be new to this, the 10-year treasury rate is kind of like the baseline that we look at for the bond market. So if you're in the stock, either you're going to be putting your money in terms of investments, you're either going to be buying bonds or you're going to be buying stocks. So here, this is the yield rates for the actual bond market. And what we see here is that there's an inverse relationship with the yield of the bond market and also with the stock prices. So normally we see the yields increasing. We usually see a fall in the stock prices. And as you see here, I'm showing 1 year out. If we go back a little bit to when did COVID start? Around February of last year, April. We saw kind of a low here around 0.6%. And we started to see a steady, incline here. Incline is not really that bad. That's a sign that the economy is starting to recover. The problem is once you start to see like a very sharp increase of, like 10 points a day, like usually you'll see a gradual 2 points, 3 points per day. But then we start to see these sharp increases here. So pay attention to like the very first one that got a lot of people in the stock market, that fear factor that raised when like overnight we increased from like 1.37 to like 1.5. We saw that day that, the NASDAQ went down, the S&P went down, Dow Jones went down. A lot of people panicked and started selling off their stocks. Fast forward to today, we're at an all-time high for the year at 1.67. So I do expect today, with these yield rates being at their 52-week high, that the stock prices are really going to be tanking today because of this. And because of that, my positions on my stocks and option contracts, I'm buying nothing but puts until I see the yield rates start to go back down.
Yeah, and that makes sense. I guess we do want to actually touch on the fact that growth stocks are going to really be hit hard when we see interest rates go up. Interest rates go up, growth stocks get hit tremendously hard. The cyclical stocks could start going up because with rates going higher, of course, that means the economy is going higher or going great, rather, or going better, whatever you want to say it. Meaning that the rates will go up, meaning that cyclical stocks will go up with it as well. So anything that's tied to the markets or it's tied to the economy, not the markets, tied to the economy. Let me say that. Raheem, I know you had some interesting stuff you wanted to share with us.
Yeah, just to go off kind of, a lot of the growth stocks that Jerome mentioned are going to take a big hit right now. So this is a prime time to catch an entry for long-term plays as well. So, we all know that a lot of things we have coming here for the future with electric vehicles. With those, uranium has been a big thing that you may want to look at for growth stocks long-term, being that this rare metal is used in the battery for majority of these electronic vehicles. So that should be something that, you may want to check out while they're dropped down at this low dip that Jerome mentioned, and maybe for some long-term. And one more other long-term growth stock you may want to look at during this drop is the financial technology companies. Yes, traditionally banks is usually the way that we handle all of our money, but here in the future, a lot of those fintech companies, such as PayPal, Green Dot, and so on, will be handling a lot of transactions. Yep, Cash, Square.
Yeah, I see Stripe. Yeah, I see Stripe is actually trying to come to the market. They're saying that they're the biggest private company right now, the biggest startup. They're like their valuation is huge.
So that too.
Yeah, that valuation is huge. So Stripe, I think they're coming to the market, and I think they actually are coming through a fintech. I think I'm not 100% sure on that, but I think I was reading something about one of these guys coming to the market. Kenneth, I know you had some good stuff for us talking about some strategies and things that you were looking at.
So similarly, like Ryan was talking about the dip in the market, just even looking at it from kind of a high level, there's a bigger, I guess, philosophy that I've been trying to even train myself to think of, and adjusting my short-term ideas and how long I think for my short-term and long-term plays. So I noticed that a lot of companies were going into, or I guess a lot of the bigger power movers were going into financial materials and industrial stocks. And so that's kind of a difference between our buy and hold idea with blue chips. And so a lot of investors may think like, oh, well, everything's going down, sell. And that's the idea with having such negativity in the past few weeks. But it's been a kind of a learning lesson for myself as well, to kind of look at it a little longer of a time span, a little more holistically, and understanding that this is just an opportunity within the market. And so that's the biggest thing. Once you have that opportunity to establish and reestablish, and even this may be a good time to double down, or find another entry point that you may have had. Given COVID, we saw some super low entry points in companies that may not see those prices go back down again. That's another consideration that I've had, just in trying to have myself understand and really go forward with the market, but then like I said, adjusting our timelines and being realistic with what the market's giving us.
Yeah, and that makes perfect sense.
Yeah. It makes great sense, and that's what we're kind of trying to hone in on with active markets, and just develop our toolbox to the point where we can make money, whether it's in a bear market, in a bull market, if it's moving sideways. Once we develop all those tools, we can make money off of that from a investing standpoint. If we're looking long term, like you're saying, Kenneth, or if you want to go to day trading or swing trading, you have the tools to be able to make money.
It's a learning experience. I don't think we'll see a market like this before and see an example of anything where like this. I mean, COVID gave us a market that no one's seen in trading. And I think this, that example is powerful because you can learn so much from being involved in it, even for just smaller things. You know, you don't have to be these big plays, million, 2 million, all that kind of thing. Just using the opportunities that you have and seeing and being involved in the market is huge.
Yep. Yeah, I guess. Well, how you've been interacting in the markets? What's your viewpoint? Like, how you feeling about the market right now?
Yeah, I mean, so far I'm feeling pretty good about it. I mean, it's it's best to always pay attention to the emerging trends. I like to focus mainly on tech companies. I mean, I feel like it's the big names. It's always a safe bet. Like the Teslas. I try to pay attention to what's happening in the news, but again, you always say a lot of companies are they're always buying the rumor, sell the news.
Yeah.
Yeah, so you always got to be careful with things like that. But for the most part, I think when you go in there with a strategy, you just you know what you are able to lose, what you're not able to lose.
Yep.
Um,
That's key. That's definitely key.
yeah,
Risk management is key.
right. So for me, yeah, it's just all about how, just going there with a strategy, and again, just paying attention to the news, and and of course, just just being cautious.
Yeah,
So,
definitely got to be
hey,
cautious.
Pierre, so what would you recommend kind of like as a secondary plan when like those big stocks like Tesla and Apple, a couple of weeks ago, they were down for like 2 or 3 weeks. They were getting hit hard.
Yeah.
What would you, I guess, recommend as a secondary play when they're going down like that?
You better short them boys.
Yeah,
Right.
yeah. I was about to say the same thing. I mean, yeah, shorting strategy, I know it can be a little confusing, but when you understand, the concept of the bear versus the bull, then I think that really helps because when they're going up, of course you can just buy them. But when they're going down, shorting them, of course, is always the best way to go. That way you're winning either way.
You got to take a little risk. Take a little risk because you definitely make money. You make money fast in the bull market. I mean, in the bad market, but the bull market, the bull market, you definitely make money, and it just takes you a little bit longer. That bear market, it's like they always say: the bear market take the elevator, but the bull market take the escalator.
That
So,
fear factor.
It's gonna go down a lot quicker.
People they sell out of fear, so they're gonna sell quicker than they buy.
Exactly.
Yeah.
Exactly. Like it's not many people that's gonna want to go out here and keep spending money, but it's a lot of people out here that's gonna say, "Oh man, no, forget this, but sell." And that's how you
get out of there.
Fear. That's how you get stuff driven down, and then these algorithms start kicking in, and man, you just get some crazy stuff popping off in the markets.
But before we jump off, what are some of y'all's picks for the week?
Picks for the week?
I start off with mine. My picks for this week are AMD and DraftKings.
Okay.
I've been buying puts on AMD because I've been looking at those yield rates, and AMD is in the technology sector, so usually yield rates go up. The technology growth stocks, they're the ones that usually take that hit most.
Yeah.
That's pretty much why I've taken a short position on AMD, and I also saw like a pattern that I liked with DraftKings. It was in an upward channel, so I'm just taking advantage of those two.
Okay. Now I got two that I was looking at too. I got I got some open positions. I got an open position in Ping, PING, and then I got an open position in Frog. Ping, I think, does something with identification. I think there's something similar to like an Okta or something like that. And then Frog, I can't even tell you what they do, to be honest. I just saw that it was a perfect dip down. They were at like the lows, like all-time lows. And then I saw that it was kind of rounding out and forming a bottom. So that's all I needed to see. So those will be my picks.
Kenneth, you got any active plays?
Yeah, I've actually been looking into this new coin, Clever, and I've been trying to play a little bit around with Bitcoin as well, seeing that it hit a mat or a peak, and then drop back down, and so that I'd provide another opportunity. But yeah, Clever has been the biggest thing. That and another one that I found with, I mean, Ethereum, TRX. Those have been the biggest ones that I've been working on this week. So
Okay. That sounds
I'm looking now. TRX is up 3% already. So
nice. I found something in the crypto. I think it was called like Decentraland or something like that. I can't remember what it's called. I think it's like MANA or something like that.
okay.
I can't remember what it is. I have to look it up again. But I think it's called like
I mean, Clever was a wallet, a crypto wallet that I just found this past last week and a half. And so I've got my Ethereum, Dogecoin, TRX, all that in there.
Okay, cool.
So yeah, that's what I'm looking at this week.
Okay, cool.
Since you're talking about the cryptocurrencies, did you guys hear about Russell Okung? You remember, you know, NFL offensive tackle. Remember, I guess back in December, he said that he was going to convert a portion of his NFL salary to Bitcoin, and you know that Bitcoin has come to like 61,000 now.
Yeah.
So they said at the time Bitcoin was at $27,000, and now it's increased to 61,000. So because of that, he's become one of the 30 highest paid players in the NFL because of that. He increased like $7 million his salary because of that conversion. So when you got stuff like that hitting mainstream, like Bitcoin and these cryptocurrencies, it's not a joke, you know, anymore. And you got people like Elon Musk. He's been joking about it, but it's becoming more and more of a reality now.
Yeah, they're taking action on it now. Tesla went out and bought 1.5 billion. I mean, you can't make a bigger statement than that than to actually do what you've been talking about.
Yeah, people they were joking. I mean, I remember when he did it, they were joking about it and everything. They're not laughing anymore. They probably asking him questions like
exactly. They trying to convert, because you know it's a lot of companies that's actually converting their balance sheets over to Square now. I mean, not Square, but to Bitcoin now. Like, I think Square was actually doing it. That's what I was trying to say, because I think Square is doing it. I know they give you the access to the Bitcoin, but there's a lot of companies that's actually converting their balance sheets over to Bitcoin now. So that'll be interesting to see how that all plays out. Because once the big boys start messing with it, then it's real.
Yeah, I was gonna say I don't have any specific stock picks, but I'm gonna start looking at mainly retail stocks, and the main reason is because I understand with the stimulus checks coming out, people are gonna have money to spend. So
at home,
I think it makes sense.
Home, HOME, you know, we had made a lot of money off that last year.
Yeah, I remember that.
That thing right there, like, popped even harder. Like, it came back down to that 15 level that we had saw that we wanted to see it get back down to after we had ran it the first time. Came back down, and now it's running again. So definitely, retail is definitely hot. Leisure, remember, airlines is most definitely hot too. Gaming and entertainment as well too. Like all those stocks. We're seeing a lot of that stuff just because of the reopening, but we'll definitely start seeing a lot of those growth stocks.
Yeah, we made some good money last year off of Home and Michaels. Man, we made a killing off of those last year. And
I'm mad that Michaels got bought out, man, because we made some good money off Michaels. We made some money off Michaels this year because we had got in on those option contracts and made some money off Michaels. So yeah, Michaels was good to us until they bought them out, and now they're going private, I believe. So,
but that was a good thing with the good segue with the stimulus checks. Because you're gonna see like hotels and like Airbnb is probably gonna increase. That's why we've been seeing increases in Carnival and Royal Caribbean. Their stocks have been taken off for that about 2 weeks ago. And the airlines, they were making a killer. You know, United Airlines, Delta, just a lot of those.
Southwest, all of them. Yeah, there's definitely some good stuff out here. So we're gonna go ahead and wrap it up right now, guys. I hope you guys enjoyed the show, and we'll be back Friday, giving you guys another insight. And we'll start having some more guests come up, and we'll have some more topics and discussions. You guys send some stuff in. We might start talking about what you guys want to hear us talk about. But we want to say, wish you all a good day and a good trading day, and we'll see you guys Friday.
All right, buy those puts.
Buy 'em.
Put season.
Yeah, put season. Time to put them shorts on.